guys so much for being patient. Thank you guys so much for coming to today's live session where we're going to try to identify some high probability setups. But yeah, good day to you, Joe. Good morning, Robert. Good morning, Greg. Good morning, Danny. Thank you guys for coming, and good morning or good day for those who couldn't make it, and for those who are listening to the live recording. Thank you guys so much. So yeah, good morning, Adam, and good morning, Jesse. Good morning, David. Good morning, everyone. But with that said, let's move on and let's talk about what we're seeing in the markets on today. So of course, when I looked at the markets, I really couldn't see too many of the high probability setups that I was really looking at or looking for. I think some setups are in a period or phase of transition, but I do have a few that we can look at right now. If you guys have been paying attention, the market is sort of risk averse, with stocks, especially in the futures market, sliding lower. And we may talk about that in a little bit. But with that said, what we can do is try to identify some solid setups and see if we can find opportunities to execute these trades. So then the first pair we're looking at right now is the fiber or the Euro USD. That's another name for the Euro USD is fiber, but we can just keep it simple, Euro USD. And we're currently looking at the 1 hour chart. As you guys know, for most of our momentum plays, we primarily look at the 1 hour chart. But what we see here is pretty obvious. What's the bias here? If you were to trade this on the 1 hour chart, what would you be looking to do? Will you be looking to buy or sell based on how price action is at the moment? Will you be bullish or will you be bearish? Euro USD right now. Let me ask you guys that question. Okay, so Joe said sell. Anyone else want to take? Okay, Jesse said bearish. And yes, the both of you are correct. All of you guys are correct. We would want to look for opportunities to sell this pair, and we can assume it's bearish. As you can see, price hit this area of supply. This is 4 hour supply, I believe. Price consolidated, and then we had a break and violation of structure to the downside. We saw price break and close below this level. And as soon as price did this, then that's when we need to look for opportunities to sell. So that's what we're going to look for. We're going to look for opportunities to sell. But before we do that, let's first see if there is something that we love to call directional confluence. If multiple time frames support a bias to the downside, then we definitely want to look at that particular pair for an opportunity. So in this case, the 1 hour is bearish. So we can, jot that down. The 1 hour is bearish. How about the 4 hour? Okay, 4 hour is looking somewhat bullish, but it's in a phase of transition. I don't know if you guys can see this, but if you zoom in, you can see that the 20 simple moving average is starting to flatten out, and it looks like it may want to curl lower or start sloping down eventually. So what we can assume is that price is rotating somewhat, and we may see this translate even in the 4 hour chart, but we need to wait for this particular 1 hour candle to close, because when that closes, then that's when the 4 hour well, this is the 4 hour right here. When we just need to wait for this candle to close in order to know for certain whether this bias is shifting. But you zoom out, so we know the 4 hour is in a phase of transition. Yeah, we already did 1 hour, and the daily is still somewhat bearish. Price making lower lows, lower highs, and 20 simple moving average is still sloping downwards. Remember, we love to use the 20 simple moving average, in this case the 20-day moving average, as a way to identify where momentum is and what side of the market we need to be on. So in this case, we're going to look for a sell opportunity. We have the 1 hour bearish, 4 hour, there's ambiguity, daily's bearish. So then there's multiple time frames. There's more time frames than just one time frame that's bearish than bullish. So of course, we're going to stay on the side of the dominant momentum. And going back to the 1 hour chart, the next thing we need to do is figure out where would we enter this sell at. And remember, we want to buy at resistance and sell at resistance and buy at support. So the first area I'm looking at right now, of course, what we see right here, we see price approaching this zone of demand on the 1 hour. So let me just plot that right here. So then we have this zone of demand right here. Price may push a little bit deeper and then start correcting higher. But what we want to see is a retracement into an area of supply. And one of the main areas of supply I'm looking at is this area right here, where we have this what is it in this move down that we see that could be an area of supply? HC, yep, exactly. When he mentions HZ, for those who may not know, he's referring to the hesitation candle. So, we're looking at this particular candle right here, this hesitation candle right here. So we see that this candle is also an indecision candle. So the very fact that it's a hesitation is in the middle. We see this green, this anomaly in between two strong bearish candles. We see that. And we also see that it's an indecision candle. That lets you know that there's likely orders positioned right here. This is what we call a hidden structure as well. In this case, it would be hidden supply because we expect sellers to come in. We expect this zone to act as an area of supply. But we also have this area as well where the sellers came in as well. Right around here, we saw price action where, the sellers came in. We had a violation of structure to the downside. So really anywhere within this particular zone, let me just draw out this zone for you guys. But over here, all the way up to here. So anywhere within this zone right here is where we could see the sellers come in at. So what we want to do is pay attention to when price reaches this area. Now, there's a few things you can do. You could, draw on your Fibonacci if you want. We can either start here or start here. Let me see if I started here first. So we started here from the high all the way down to the low. Then our 38.2 is right here, which will be good. But let's see if we started from this candle right here to here. Okay, so we started from this candle all the way down to the low. Then we see that our 50 is right here and our 61.8 is right within this zone. So in either case, what we're going to do, we're going to look for opportunities to sell as soon as price reaches this particular area. And then we can place our stops somewhat behind this zone and try to ride it out, maybe somewhere in between, in the middle of this area of demand down here. So that's what we're going to do. We're just going to simply wait for price to correct to the upside, wait for that correction. And what I'm going to do, for the sake of there being not any confusion, let me change the color, make this orange. So we're going to wait for the pullback, and then we're going to look for an opportunity to sell to the downside, possibly, to this zone of demand right here, because this is where we saw this explosive move to the upside, right here, this displacement or this imbalance taking place. So then, what we'll do is look for maybe an opportunity to buy when price gets around here. But anyways, we just need to wait for this retracement to take place. Now, let me go to the 15-minute chart to see how things are looking on the 15-minute chart. Okay, so right now we're looking at the 15-minute chart, and this is what we see right here. Okay, so remember what we said before. We talked about how once you go down to the triggered time frame, not the first area of supply, which is right here, but the second one, which is right here. And typically what you will find, you'll find that price will go to the first one, and then it'll act like it's coming back down or reversing. And then it'll come up, grab this liquidity right up here to the second one. And then that's when you'll see price slide to the downside. So what I want you to do, I want you to test that. because you'll find out that it often works. Not the first area of supply on the trigger time frame, not the first area of supply or first order block, whatever you want to call it, or first hidden structure, but the second one up here. So then, right around here, if you want to hone in on that zone, you can say, okay, from this candle, from this low, all the way up to this high right here. This is the zone that we really should be paying attention to. So, we can just create, make that a different color. But yeah, so this is what I'm looking for. This is what I'm expecting right here on this particular pair. So then, we'll see what happens. We'll definitely see what happens. But I'm expecting price to, of course, correct up into the zone. And then we can have our target down here with a stop. I'll put it right behind here. Just a play to say, give me a 2-to-1 reward to risk. So then something like that is pretty good. So, if you want to, you can place a price alert if you want to. But this is a deeper correction. But I think it should hold. I think we should be fine with that. So yeah. All right. Yeah, we should be fine. We should be fine. So yeah, this is what I'll be waiting for price to come to this area or the zone. So I'm going to put two alerts. My first one's going to be right here. Add alert and just say date October 19th. Price testing when our supply zone, look to sell soon or now. Okay, so I got this right here, and then up here is the more refined zone. But I think we'll be fine. Once price touches this, we'll have a better idea of what's really going on. But if you really want to make sure you're in, then get in right at this level, which is really right below institutional level right here. 97, 98, this area is right below our institutional area. So what we may want to do is enter in early, because there's no guarantee we'll see price break above the 9800 institutional level. And as a matter of fact, let me just draw this in right now so we can be fully aware of when price hits that level. So then we have this right here. So we have this institutional level at 98 cents. And yeah, it's going to be interesting because usually these levels hold. They act as areas of, strong structure or strong resistance in this case. So, we may not get a push up into the zone, but then so we just want to pay attention to how price responds in this area anyways. And since this is sort of near institutional level, I'm going to modify this and put this at 97.97. 97.97. Few pips or a pip below. 97.97. Okay, so it's a little bit lower. So we'll be notified when price hits this structure right here. But yeah, this should be pretty interesting. So we'll see how this all goes. But again, we're looking for a retracement before we execute a sell. So that's what we're looking for. As a matter of fact, why isn't that showing on a 15-minute? Right here, let me make this visible. Okay, so yeah, this is what we're looking for right here. Hopefully we can see something like this. And yeah, so I'll let you guys take this screenshot if you want to. I don't know why this is up. Let me delete that. But yeah, you can take this screenshot, and we'll be looking for this particular setup, and I may add it, or we may add it to the members area later. But are there any questions about this Euro USD sell setup before we move on? Going once, going twice. All right. So yeah, with that said, what we can do is now move on and look at our next pair, which is the pound USD. And as you guys know, um, we were trading that opportunity or trading that pair yesterday. Um, and I actually kept the one on in my personal account, the trade on, and it actually hit my stop. It hit the target like we planned, which was pretty good. The target was right where this orange line is right here. But it ended up um, hitting that target this morning. But there was another opportunity to get in. It was kind of frustrating because, we actually had our order hit, but it did not trigger that order. I think, well, I don't think I have it up, but yeah, this was the setup from yesterday. We remember we entered at 13, I believe, what's it, 1337? Yeah, 1337, 1.1337. And as you guys know, price was consolidating for a while, went up, grabbed some of this liquidity up here and then shot down. And yeah, actually, one of these days I'm going to do a webinar on, what makes, um, well, like even on the 1 hour chart, there's reasons behind why we saw a deeper correction in this case. And well, I'm going to do this real quick, just show you a quick example. I think this will help you guys out a lot. And you're going to be like, okay, Melvin, thanks. You've helped me out a ton. Because sometimes we don't know when corrections are going to end or when they're really, really going to end. But in this case right here, um, and I know I didn't really do this yesterday, but this is what you have to do on most cases. You have to be aware of what's really going on. So in this case, we had this pullback, and in most cases, you're looking to sell. Price came to the zone of supply, um, right here, this area of hidden structure, right here, tested it, and then it, we're expecting price to slide lower, but you have to look to the left and you have to see, okay, if I'm selling, where do you think the buyers will come in at? Or where is there areas of demand and price history? So then, we can look and see that, we had an area of demand that came in, right around here, right? Right around there with this red candle. And then we saw this huge push to the upside. So what we could assume is that price may test this area and then push up. Buyers may come in, grab some more liquidity, and then we can look for the sell. And really, that's exactly what took place. We saw price slide lower, encountered this zone right here, this zone of demand, and then you saw price push up higher. So then, if you did a measured move from here to here, you would see this is exactly where we should have entered our short. But I tried to enter on confirmation the order. It price hit the order, but it did not trigger the order. It was the most frustrating thing. But of course, that happens from time to time. But yes, so going down to the 15-minute. From there, you can just look for opportunities to short and wait for the break of structure and then the pullback. And this is where we did not get tagged in. For some reason, it did not tag our order at 1330. And it did hit price, but it did not execute the order. So then we were not able to get in on that new position, and prices kept falling all morning. So yeah, we missed out on that. It happens, but well, it's actually been happening a lot lately where we haven't had certain orders triggered that we've been planning for. But that's the nature of this business. Sometimes it happens and you're just doing well, and sometimes you just miss out on good opportunities, and it's not your fault. You just stick to the plan, and price doesn't either hit the level or it doesn't execute the trade because of the spread. But all right, so right now we're looking for a new setup on pound USD, and we're still looking to sell, but we see here that price is currently testing a zone of demand right here. So we're going to see this retracement happen soon. Price is testing this area of demand, and what we're expecting is a pullback into an area of supply or resistance. Where's the next area of resistance? Well, pretty obvious right here, right? Where we have this cluster. The cluster of candles right around here. This is our next area of supply or resistance. We saw price push down, break, form this low. It violated this structure right here to the downside. So what I'm expecting is a pullback into this zone, a correction into this area. And do we see anything to the left that can sort of help me with my analysis? Yes and no. We do have this right here. So yeah, let me just do this. I'm just going to draw in from here all the way up to here. And let me make this red. All right. So yeah, this is where I think price will go next. Let me delete this. I think it's going to go up and retest this zone up here. And let me delete this because we don't really need this anymore. It's going to, retest this area. And then we're going to see the sellers come in again. And we're going to get another push lower. But this time we're going to target this area right here, right at 1185. So that will be our next target. So from here all the way down to here. So this is what we're going to look out for on pound USD. And let me just add this right quick. Put this order, and we can do it right like that. And target this right here. So then, of course, this is the pound USD, and we could probably get a tighter stop. I'll see how things look when price gets to this zone. But, if you wanted to place a pending order, you can at this particular level right here, which is at, I think, 1265, 1.1265. You can place a pending order there, or you can just simply place a price alert, which is what I'm going to do. But let me drop down to the 15-minute to see how things are looking on that chart. Okay, so yeah, this is the 15-minute chart, and we have our first area of supply. Second is somewhere up here. Yeah, this one right here is going to be interesting. Let me go down to the 2-minute. Okay, yeah, it's pretty much the same thing. First right here, and the second is right here. So yeah, let me do that. Let me identify this one right here, a more defined zone and area of supply right in here. And yeah, let me change the color as well. Let me do yellow right there. All right. So right here, this is our more defined area or zone. And if price does correct, most likely it'll touch somewhere within this zone right here, this area, and then that's when they'll slide lower. But if you want to get in early, you can. And what I may do as well, I may just pull this down a little bit more right here. So maybe 38 pips. 38 pips, that'll give me a 2-to-1 reward to risk. So yeah, that's what we're going to do right there. So again, you're just going to simply wait for price to correct to the upside, and then we're going to look for a selling opportunity on this pair. Now, if you want to, since we're already testing this area of demand right here, if you want to, you can look for bottoming. on a smaller time frame. And what I would recommend you do is look to see what happened with price during this first bottoming attempt. Right here, what actually happened? How did price consolidate? So you can drop down to the 15-minute. You can scroll to the left. You can see that there was 15-minute bottoming. Price corrected, pulled back, and we saw price expand to the upside. So guess what we'll do when, in this area, we'll look for 15-minute bottoming again. So then if we can get the 15-minute bottoming, break to the upside, pull back, then we can maybe trade this up into this zone. And then from there, we'll look for the sell. So that's just something for you to do. Remember, the market loves to leave repeatable footprints. Like it repeats certain patterns over and over again. Like you can look at price history to sort of figure out what may happen in the future. And that's the way God made it with these charts. You can look in the past to give you a clue. It will give you a hint of, what you may need to prepare for in the future. So in this case, we see 15-minute consolidation accumulation. And we can expect something similar even now because it's at the same zone, same price level. We should expect something very similar to what we're seeing on this chart right now. So yeah, main trade, looking for a sell up here. But if you want to get in on that correction, you can trade this correction to the upside, because sometimes I miss good opportunities on trading the corrections. When I know I can predict it, but sometimes I miss out on it. But yeah, so then this is something that we're looking for on pound USD. And are there any questions before we move on? Going once, going twice. Yeah, I just kind of wanted to break in. I know we had a few announcements come out that actually had some level of influence on the price of the US dollar. We had US housing starts and building permits that came out that actually showed that even the Fed's decision to hike rates, we're now noticing a slowdown, a deceleration in housing starts, because for the month of September, U.S. housing starts dropped. It fell by 8.1%. It dropped 8.1% from the previous value. So then, I guess I don't know if Mel was going to move on to the fundamental analysis. I just kind of wanted to point that out, and then we also had Canada inflation data that came out that was quite sticky and pretty hot. It came out at 6.9% year over year. So that goes to show that there's some intrinsic structural issues in really global markets in general that are keeping prices pretty high and pretty sticky. So that means higher rates across the globe. Probably the Bank of Canada is going to probably stay hawkish and continue to high rates, even though at one point they were talking about possibly pivoting sooner than they had planned. But right now we're seeing the effects of rising interest rates on financial markets. And even today's activity, today's trading sentiment or bias is also influenced by what we see with the rate hikes. But I guess I can hold off and save what I really want to say for the fundamental analysis part. I just kind of wanted to break in and say that for some of our dollar-based trades or even dollar-denominated trades, we may see some of what we planned may not work out, depending on the data, the news that just came out a few minutes ago. But we stick to our plan and we adjust our plan if we have to, if things do change. Yeah. Let me come back here and see how this was looking on a 5-minute. Okay, yeah, we see this on a 5-minute, and we could use it, but I think it'll probably be better to use 10-minute. I just wanted to check to see how I was looking. That's all. But all right, so then I guess we're done with this. I'm going to do one more, and then we're going to pass the mic over to Marvin. And let's do US dollar Swiss franc and see how that's looking. US dollar Swiss franc. Okay, so yeah, for this one, we see price expanding to the upside. Remember, we're sort of bullish on this particular setup or pair, mainly due to US dollar strength. But the Swiss franc has been weakening as well. I believe it's one of the weaker currencies for this morning. And what we want to do is wait for a correction in price. And For this example, we have all this hidden structure. To the well, we have two right here that we can see more visibly. But we want to look for starters, we want to see if there's directional confluence. We see that the 1 hour is bullish, 4 hour is bullish right now, and the daily is definitely bullish. We shouldn't have to look at that. But my main concern is the fact that we are testing daily supply up here, or daily resistance. So then that's something that we definitely have to take at heart, or pay attention to. The fact that we're hitting this area of daily supply or daily resistance, and just like in times past when we saw a nice sell-off, we can see something like that again. But in this case, we're getting a retest, which could also mean something different as well. But what we're going to do is look for opportunities to stay on the side of momentum until price tells us otherwise. So again, we see price create this double bottom. Where did it create this double bottom? At this area of support, where we saw price create 1 hour bottoming before. We saw this almost like inverted head and shoulders before. We had the left shoulder to head and the right shoulder right here. Price broke to the upside, and we saw a continuation of this push. But guess what? We see 1 hour bottoming here again. Remember, look to the left, at least repeatable footprints. If you see bottoming sometime in the history, like in the past, at the same price area or zone, then you should see something similar to that in the future. Of course, it's not an inverted head and shoulders, but we do see 1 hour bottoming. We see a double bottom. So then we do see that potential reversal could take place in this area. But we have the break of structure right here, and now we have to wait for price to pull back. And where would we think price would go to? And this is where it gets kind of tricky. But I'm going to look at, yeah, I'm going to look at this zone, this area right here. Let me draw it out. And, of course, we have this hesitation candle right here. Really, that whole area is important. But let me do it from here. Well, yeah, let me push this up right here, because we can't ignore this hesitation candle, this zone right here. So what I'll be waiting for price to correct maybe somewhere in this zone, and then we'll look for an opportunity to buy. And we may want to look for bullish confirmation, since this is an area of supply up here, or resistance. But let me draw in the Fibonacci from this low all the way up to where price is now, even though price could push higher. But we see here that the 50% Fibonacci retracement is in this zone. So then that's good for us to know. But yeah, so then we'll just simply be waiting for price to give us a nice solid retracement, and then an opportunity to execute this particular buy. So again, look for a price to pull back, and then look for an opportunity to buy this on bullish confirmation. And who knows, price could expand and break above this zone right here. There's a possibility, but we have historical context, and we know that every time price reaches zone or reaches area, we saw a nice dip in price. So it may be best to close out your position once these highs are met. So yeah, that's pretty much it. Yeah, let's highlight this particular area. This zone is where we would want to execute our buy at, somewhere within this zone or area. And we're going to look for that particular setup. So yeah, we'll be going for longs right here. All right. So yeah, are there any questions about anything that we've talked about, even on today's session? or right. We're not ending the session, but just in this first part, because I think that may be it. Well, yeah, what we could do is look at US dollar, the NASDAQ 100. Look at that real quick. Let me go to US 100. All right. So yeah. All right. So yeah, this is US 100. Yeah, on the 4-hour chart. Remember we put this last yesterday on the 4-hour chart. We was waiting for price to break close to the upside, and it was pulling back into this zone. I think we talked about this before, but price came back, touched the zone, and it pushed to the upside, but it didn't reach this level up here. And you know, we could have gotten in early, but we wanted to wait for bullish confirmation, and we did see the bullish confirmation, but we didn't get a deep enough correction, and we weren't able to get in on this move to the upside. But as you can see, price retraced right back to the same area again, and there is a possibility for us to go long again. But what I'm going to do in this case, we see that, price gave us this reverse on the 4-hour. What I'm going to do is simply wait for price to reverse on the 4-hour, because this is what I see. Like, even on this way down, in order for price to go up, we have all this structure. We have this area right here, which could act as an area of supply. And, that's just something for us to know. And also, let me just do this since I see it. We have this trend line as well. So if I'm going to enter this buy, I would like to see price break this zone and break this trend line to the upside, because price could very well respect this trend line and respect this zone of supply and head lower. We've been bearish for the most part. Stocks have been selling off. The futures, as far as the indices, have been selling off. But, there's a possibility that we could see price reverse right about now. So, we'll see. When this candle closes, that'll determine a lot. I know we're currently testing this area of former, demand right here. But this area was already tested before, so price could very well break through it. But what I want to see is, again, but let me just draw it out. I would like to see price push up, break this area to the upside, come back, and then look for that opportunity. Now, remember what I said before. The past will give you a hint of what to look for in the future, right? So even before this move happens on the 1-hour, there's a possibility for you to get in on this move early. Why? Because of this area right here. What did we see in the past before? Well, I think I showed you guys in the chart markup section yesterday. We saw a double bottom on the 15-minute chart. So there's a possibility we could see something like that again, a double bottom in a pullback. We didn't really get the pullback yesterday, and so we weren't able to really take advantage of this move. But we could see a double bottom again on the 15-minute chart. So just be on the lookout for that. Be on the lookout for a double bottom on the 15-minute, or some sort of bottoming pattern. It doesn't even have to be a double bottom. It could be an inverted head and shoulders pattern. It could be a triangle consolidation, a symmetrical triangle type pattern. It could be any form of consolidation, a box consolidation. It could be anything. But there's a possibility we can see that consolidation take place, on the 15-minute chart. So then just be on the lookout for that. Just be on the lookout for that consolidation and then a break. So, yeah. But yeah, that's it for now. And what I'm going to do is pass the mic over to Marvin, and he's going to talk about what you should expect fundamentally and, all that good stuff. All right. Okay. Yeah, so then, for those of you guys that are new, I know we use the term, fundamentals, fundamental analysis, what Melvin said, looking at how things are fundamentally, and you can get quite confusing because of course, even me starting off, hearing the word fundamentals, you tend to think of maybe foundational, basic blocks, those things that are fundamental to trading. But of course, in the trading world, fundamentals and fundamental analysis simply is just referring to really the underlying reasons behind why prices move the way they do. It could be due to central bank monetary policy, it can be due to news, it can be due to economic indicators like when we talk about inflation or housing numbers. So then that's all under the category of fundamentals, pretty much the news behind price action. Why is it moving the way it's moving? So then, of course, there's technical cases for why prices move the way they do, but there's also underlying fundamental reasons or news driven reasons behind why prices move the way they do. So then I just kind of wanted to point that out for those you guys that may be new or may misunderstand what we mean by fundamental analysis and technical analysis. What Melvin was doing earlier in the session with looking at charts, drawing in trend lines, that's considered technical analysis. But for this part, we're going to go over a little bit of fundamental analysis and also intermarket analysis, where we compare various asset classes and instruments, and we get an idea of what the bias is in the market. So then what I'm going to do right now, I'm going to go to some of our futures markets because that's a good risk barometer. If you want to know what the market sentiment is in general, then you want to look at your US future market. So then what I want to do right now, I'm going to look at the daily chart. Yeah, and for those who, they're trying to get funded, this one right here is called US 500 in the funded accounts. Yeah, because it's the S&P 500 E-mini futures contract. So then this would be the equivalent to US 500 if you trade on any broker that does, CFD or contracts for difference. They trade the S&P 500 as sort of like a derivative. They have an index that's a derivation of the S&P 500 E-mini futures. So then, so then that's what Mel was talking about for those that do trade with brokers that do have US 500, or you plan to take the challenge and join a prop firm. It's actually under US 500, but the original is ES, the E-mini futures. And as you can see for today, you see right now, futures, S&P 500 futures are selling off. This is the daily candlestick. And you can see even right here that price for the past 2 days, we've been seeing, of course, this bounce, this correction, this move to this area of supply up here. And of course, that was on the back of good earnings data. So far, we've had a good earnings season where we had good earnings commentary that have come out, especially coming out the gate with our financials. We had Bank of America data come out. We had JP Morgan. Like we've been seeing stellar gangbuster earnings in most of our companies across the board. And there's reasons for that as well, because to be honest with you, a lot of these companies, even during their previous earnings calls and reports, they sort of undershot their expectations or lowballed their earnings numbers, so that even when the new numbers do come out, they exceed the forecast because they pretty much lowballed it and undershot in previous reports. So then it makes it look like this season is a good earnings, like companies are doing well. So it's all sort of like an illusion. It's pretty so they're pretty much so for the past 2 days, on the back of earnings data and just the fact that we're at support, we saw this correction in the S&P E-mini futures, and you can see here that it corrected. Well, let me just do this right here to an area of supply right here. You can see this area where supply exceeded demand. It corrected back up here, and now we're seeing a technical case to sell. Because really, to be honest with you, nothing has systemically changed. We're still in a rate hiking environment, and there's still a lot of fears as we move into the winter season. But we can see this with the S&P 500. Let's go to the Dow E-mini futures right here. This is Dow 30. I think If you used to trade on a platform, it'd be US 30,
Mm-hmm.
or on a
On a
broker that
broker.
has a,
Mm-hmm.
CFDs, contracts for difference, it'd be called US 30. But you can see here how we saw the same type of double bottom in a sense. The interesting thing about this is that this could trick traders into thinking, okay, this is a double bottom. It closed above the neckline, so I
Mm-hmm.
should be looking to go long, and this should be the beginning of a bear market rally. But as you can see here, you can see that, yes, it broke above this level. But if you look straight to the left, you see this candlestick right here. This is an area of hesitation where we see a supply exceeded demand. It created this impulse lower. And as you can see, price honored this area right here of resistance. And you can see that the sellers are coming in and the Dow is moving lower. And you can see the same thing even for the NASDAQ as well. Let's go to the NQ. Just kind of wanted to point out how stocks are moving lower, and you can see a technical case for it. You can have a technical reason for it. Now, I know Melvin, he's been doing a lot of work on the Dow.
The NASDAQ.
I mean, not the Dow, but the NASDAQ. But you can see here it's sort of the same as we saw with the S&P 500. This area of supply right here, it kind of retraced into it on the earnings data. It was also oversold, so we needed that correction. A correction was pretty much due for this type of index since it was selling off. But they found a reason to go long on this good solid earnings data. So you can see here that even, in this candle right here,
the low of that indecision candle.
yeah,
That represents the range.
yeah, you can pretty much, identify the low of this long dragonfly doji candle. Let me just zoom in right here. You can see right here, this is a doji, and it's called a dragonfly doji because it has a long tail, and the body of the candlestick is much higher but a short upper wick. So this is, of course, indicative of indecision, consolidation, accumulation, a change in momentum. So you can see that it came right into this range right here. And let me just go back, and it's starting to sell off. So there's always, going to be a technical case for why you should enter in. But typically what the markets try to do, they assess the fundamental news, what's going on, and then they will drive prices to a technical level that makes it sense for them to trade in alignment with the fundamental news. So what is contributing to this sell-off on today? And I know we talked about the US dollar is strengthening, but a lot of this sell-off for today, even though we're still getting solid earnings data, because we had Procter and Gamble's data come out. Let me just look at that real quick. PG had their earnings data, and of course they beat estimates. I know right now the pre-market price is at 130.39, which is a little bit higher than where it closed. But of course, it's hitting. I don't know if you heard Melvin, but it's hitting an area of supply. But right now it's set to open right at this level right here, 130.33, 39, 39, that area, and it may slide lower from there. The reason for the gap higher is simply because of the earnings data. It came out pretty well, showing that consumer demand is still high, that consumers are still buying goods, and yeah, that's going to translate into some bids. But it all matters what happens when Wall Street opens. Is this, a gap higher in anticipation for it to fall lower? And it may fall lower just simply to close the gap and just consolidate. But we don't know. We'll see. But this is Procter Gamble and a few other earnings reports this morning during the pre-market, New York hours, showed that earnings were pretty solid for the third quarter. So then what is contributing to the sellout? What is also helping? We see a technical case, but what is also happening? And it's really due to rising treasury yields or rising real yields. We're seeing real yields pick up in the market, which is going to put pressure on stock markets and and even on gold. Some of our commodities. So then let's see right here. Okay, we're gonna look right here for the US 5-year. Now this is sort of like an, how can I say, an indicator that I had to create, because for trading view they don't have a real-time indicator for US real yields. They normally have one for the end of the day. So if you want to know what real yields are sort of close to real time and get a close figure. This is not an exact figure. It's only off by like 1 or 2 or 3 basis points, but it still is in a ballpark range of what US, 5-year real yields are. But pretty much the equation is the nominal yields, which is the US 5-year treasury yield, minus the 5-year break-even rate, or by 5-year break-even inflation rate. Because what real yields are, they're pretty much the treasury yield minus inflation expectations. Once you subtract inflation, the inflationary component out of it, you would get the real rate on the 5-year, not the inflation, how can I say it, the one that's modified or for inflation, but you get the real yield or the real rate. So you can see here how real yields have been going up, and it's been propping up to the upside. If we go to the US 10-year equivalent, we can see that real yields are moving to the upside. And what this is also helping to do is also helping to underpin the dollar or the greenback. So for today, we see the dollar rallying to the upside. Let me just do this real quick. If we go to the Dixie, we can see for this candlestick, this current candlestick, we see the strong, let me just zoom in. You see the strong bullish candlestick, and it hasn't closed yet. It could retrace some, but we're seeing this strong demand in the dollar, in the greenback. And to be honest with you, it's creating some jitters and concerns, especially when we're looking at the US dollar versus Japanese yen. Um, because the US dollar versus Japanese yen is continuing to go high, and there's talks and rumors, since it's close to the 150 handle. Let me just draw this horizontal line in right here. Is right close to the 150 handle. There's talks that once the US dollar Japanese yen breaks the $1 handle, then this may contribute to some routing or some sell-offs or deleveraging in stock markets. We may see an expediting or or pickup in stock sell-offs, simply because of just the weakening Japanese yen and the US dollar strength. So then we can see here that even on a few days ago, or really, let's go, I think it was, if we go down to the 1-hour chart, we could probably see it better, because the Bank of Japan did try to intervene. They didn't announce this. It was more like an unannounced intervention. Okay, I know we got this alert coming out right here. But on yesterday, you can see here that the Bank of Japan tried to intervene a few times. They tried to push, the yen. They tried to strengthen the yen and push US dollar Japanese yen lower, but it did not succeed. It did not work. And they tried to do it here again. These are unannounced interventions, but it didn't hold. So this is some cause for concern, because it's approaching high levels. And what could the Bank of Japan do? Is there enough money they have even in their reserves to defend the Japanese yen? If they're not going to pivot like the rest of the central banks or become more hawkish, then there's only two things that's left that can happen for the Japanese yen. Either they could just let the Japanese yen continue to weaken, and that increase inflation. They import inflation as they have to, pay for oil. Since they export most of their oil, they're not an oil producing economy, so they have to import most of their oil. So then, since they have to buy oil in US dollars, that's going to make it pretty expensive for them. They're going to have to convert their Japanese yen into US dollars. And if the yen continues to weaken, it's going to become more and more expensive for them to purchase US dollars to trade or buy oil. So then either they continue to let the yen weaken and just continue, since they're going to be stubborn and not pivot or not come out of negative territory with their interest rate, or they can simply abandon yield curve control and some of the other measures of sort of like quantitative easing that they're using that is contributing to some of the yen weakness as well. So this is, a major concern that, what the rising dollar would do to the Japanese economy. And, as it approaches 150, will we see a greater, deeper sell-off in stocks? Because right now the focus has sort of moved away from UK gilt markets or the US or the British pound. You remember a few weeks ago we had that capitulation in the British pound due to UK pension funds busting and or about to burst, and the banks having to come in and prop up the pension funds. But right now we've moved beyond that, and the focus right now is on the Bank of Japan. What is Japan going to do? So a lot has taken place this week. I know some of you guys have heard the announcements. Let me just talk about this right here with the uh, SPF, SPR. Let's see, oil. Just say, let me Biden administration. Let me just do this right here. So you can see here how you guys heard that on sometime like well, they made the announcement that they're going to actually try to release more oil in their oil reserves or in the strategic petroleum reserves, which is really our emergency reserves to sort of help support the energy market. So then they made that announcement that they plan to release about 15 million barrels of oil and tap into the oil reserves again. I think the first time they released about 118 or something, or 180 million barrels. Now they're releasing 15 million barrels. So then that's interesting. I don't know if they have any plans to replenish those strategic petroleum reserves, because they're primarily just for U.S. in the case of emergency. We have our own stockpile of oil that's set aside in case of emergency, or even so they can still divil and dabble and get in there and help to sort of support energy markets domestically. But right now you see that they made that announcement, and to be honest with you, I feel that it's politically driven. This is a month ahead of the November midterm elections, and of course the Biden administration is going to do whatever they can to sort of how could I put it, make it seem like they're for the people, and they're going to actually do what's best, bring a level of relief so that traders don't feel, or that voters don't feel, the high gasoline prices during the time of voting. But to be honest with you, really, this is just sort of like an announcement. Is not expected to do much, especially just 15 million barrels, because the issue in the US is not so much oil, but it's really the lack of refineries. You can release barrels of oil to help prop up the oil market, but if there's refineries that are closing, if they're putting forth laws that close oil refineries, then there won't be any gasoline created, because we need refineries open in order to refine that oil and make gasoline. So then this is pretty much like a nothing burger. It's not expected to really do anything, because the real bottleneck is in oil refineries, not oil supply. But that's a whole nother issue. So then a lot is happening financially as a result of politics. So then what I want to do, I want to go to a certain site. You guys, we haven't been to it in a very long time, but ooh. Oh no. I'm going predict.org. I'm going to go to predictit.org, which is really a financial site where they allow you to bet on what's happening. So then, of course, we don't know what's going to happen during the midterms. But of course, right here with predicted, this is sort of like the market's expectation. This is sort of like the public actually buying. It's almost like sports betting, like they're paying for their bets on who's going to take over the house. There's a plethora of different scenarios that they go over. But according to predicted, of course, the market, or just in general, those that are participating in this particular type of market. Now, this is a derivative market. It's not anything that's based on an asset, but then you can see where the votes are going to lie. So then right now they're saying right now there's a how can I say it? Like, based on the bets that have been executed, they're saying that the Republicans may take over the Senate for this midterm election. And of course, but it's fairly close, but they're saying right now this is the market actually pricing in um, what they expect to happen. So then you can look at this. I would encourage you to pretty much go through the site, look at pretty much, for each of these like GOP Senate seats after midterms. Um, you see, you like if I were you, just go through this on your own and just kind of see what the market is expecting to happen politically. And if you want to, you can join it and
Bid.
and you can bid on it as well and place your bets and make some money, off of it. But it's sort of like sports betting where you can get in and you can see um
Yeah. Actually,
where
this is sort of like the futures market.
yes,
Hmm.
yeah, it's sort of like, yeah, the futures market where you're betting on a future outcome,
Hmm.
a future event. I forgot there's actually a term for it, and I can't remember what it is. But you can see here, when it comes to GOP governors after midterms, 32 or more. That's a little bit higher. Um, but you can go to each one of these and you can actually place a bid and make some money on it. And but they also have world events as well right here, where they have Brazil presidential winner in 2022. Right now, the bids are what I guess the market is expecting Luiz Lula da Silva to win. Um, but if you feel that Bolsonaro is going to win, then you place your bid for Bolsonaro and see what happens. But yeah, this is an interesting, cool site that I kind of wanted to point out that even when trading financial markets, like all of it's political. It's and since this is a political year, that's going to have a deep impact on how asset prices move and what the current administration would do to paint a picture of a good, healthy economy. Because we know that most voters vote based on their pocketbook. They vote based on how they feel in their livelihood, or they feel like things are going well. But also some are more moral voters where they vote on some of the moral issues and conditions in the economy as well. So then this is just something new, a new resource that I wanted to kind of throw your way. And let me just kind of post this link right here. Let me just do this right here. Copy link address. And you should go here on your own time and just explore this page. They have a lot of cool polls and information that you can sort of look at. So yeah, that's predicted.com. But I just kind of wanted to point that out since we talked about SPR and what the Biden administration is doing to sort of, in a sense, try to buy votes. But yeah, like fundamentally, it's probably going to be a nothing burger because even if they release these oil reserves from the SPR, if they're closing refineries at the same time, then how is that going to really help with gasoline prices? So yeah, so that's that. But let's go to investing.com. Look at the economic docket real quick. Go to economic calendar. And let's see. Let's go down. We had a slew of inflation data that came out of the United Kingdom. Inflation is still hot. It's in double digits for the UK. You can see this right here. The inflation came in pretty hot. So then that's definitely going to result in the Bank of England and possibly having to stay more hawkish to bring down inflation. We had Eurozone inflation data come out. It actually came out, slightly under the forecast for 10%. It came out actually in its single digit 9.9%, but that's still pretty hot, still pretty firm. So of course the ECB should remain hawkish to bring that down. That's still pretty high, 9.9% inflation. But let's go down to the US data. We just talked about the US building permits. We saw an uptick in building permits, but usually that's a lag. Like building permits are usually a leading indicator of housing starts. So typically housing starts can happen within 30 days or even longer from when the building permits are approved and agreed. So then, there can be a slight discrepancy between the data. They don't run in sync all the time, but you can see here how building permits picked up, which could play out in next month's housing starts. But for now, we're seeing housing starts drop, and that's primarily due to rising interest rates. That's going to put pressure on the housing market, and we're going to see, the real estate market suffer as a result of mortgage rates going up in conjunction with the Fed funds rate. So then we saw a negative 8.1% drop in housing starts in September. So then that's pretty interesting. But we had Canadian inflation data come out, and it came out pretty sticky as well, beating the forecast, coming in at this 6.9% right here. This is the headline figure, which beat the forecast of 6.8%. So across the board, in both the UK and both the Eurozone and Canada, we're seeing inflation pretty sticky, which is in agreement with what we saw last week with US inflation data. So that means, more hawkishness from central banks. When I mean hawkishness, typically that means they're going to pretty much raise interest rates and tighten liquidity conditions to sort of cool down spending and bring these prices lower, because one of the jobs of central banks is to maintain price stability, and that's one of the ways they do that is by hiking rates and balance sheet reduction, removing debt and causing debt to roll off their balance sheet, which they've been doing. So for the rest of the day, we don't really have much. We have weekly crude oil inventories that's set to come out, and there's not really much on the US docket for this week. This is really a low, how could I say, a light economic docket for this week. It's not really going to be heavy on the docket front. But let's go to our heat map on FinViz. We already talked about US futures, but let's just go and see it across the board. You see US futures in negative territory, and even a lot of our commodities are trading lower on the stronger US dollar. They've been, falling actually for a while. Like let me just go back here. If we just go down to just, our commodities, let's just do this real quick. And if we even go to, this is copper futures. Copper futures has been falling. Let me just do this. This is iron right here. Iron futures, if we go to the daily chart, we can see that has been falling. It's pretty much been in bear market territory. And this is the reason why the Australian dollar has been somewhat weak. That the lower iron ore prices have weighed on Australian dollar, and it hasn't been able to rally as much, even in times when there's risk appetite. So then there's a strong correlation between iron ore and Aussie. But let's move on right here. Let's go to lumber. But for the most part, you can see that, of course, lumber is picking up, but it's been in this bear market. Most of our commodities have been in a bear market territory on US dollar strength. So then this has caused some people to think that inflation could be rolling over. Since we're seeing all these commodities sell off, that means that raw inputs are getting lower, since most of our commodities serve as raw inputs in manufacturing. So then if input prices are going lower, that means inflation, CPI, should go lower. So then some people are saying that this could be a good sign that we're on the verge of a turn, and commodities are falling lower. But really, to be honest, the commodity sell-off is really a result of US dollar strength more than anything else, and not necessarily that we're seeing inflation pullback, or we're on the verge of seeing a rollover in the inflation outlook. But yeah, we're seeing that. So yeah, this is milk, and this is coffee right here. Coffee. So yeah. So and even gold. Let me just touch on that right here. Well, this is gold over silver ratio right here. So we're seeing interesting. But yeah, but this is gold versus silver ratio. If we used to look straight at XAU USD, you can see here that gold is actually sliding lower, as well as real yields pick up and continue to rise to the upside. You remember, gold moves primarily due to supply and demand imbalances, and also real yields, or real, rate. So then, since we're seeing a pickup in real rates, that's going to have a negative correlation. That has a negative correlation to gold prices. So then, as real yields and real rates go up, as rate hiking expectations pick up, we should see gold pressured as a result of that. And also, this gold index or instrument is denominated in US dollars. So then, as the US dollar strengthens, we're going to see that weakening in gold. So yeah. But yeah, that's pretty much it on the fundamental side. Let's go back to futures. Let me go to the Forex side so we can get a look at the Forex heat map. And you can see that the US dollar is the one that's holding on. Most of the other currencies are selling off. So we're seeing that this is a day of definitely risk aversion. We're seeing the market sort of try to sell off or pair some of those gains from the past two sessions. But here in the Bitcoin space, we're also seeing the same thing, where the US dollar is the strongest, and the weakest for today is Ripple, followed by Bitcoin Cash and Litecoin. They're selling off for the session. So Bitcoin, if you guys know, has a strong correlation. It's sort of almost grouped in with traditional markets as well. So then, when we see US equity sell off, there's a possibility we'll see the Bitcoin sell off as well, since it's sort of there's that interfacing, or it's sort of become a part of the traditional financial market Bitcoin has. So yeah, but yeah, that's it for fundamental analysis for today. I know for the rest of the week, well, yeah, I forgot to mention that we do have some central bank Fed speech today from Charles Edmonds. He's the Chicago Fed, and I can't remember who else, but I know some investors or traders will be paying close attention to them. But for the most part, just look for opportunities to buy the dollar. The dollar is benefiting, and yeah, and there's plenty of reasons for it. But yeah, just look for opportunities to purchase a dollar. And there's a few stock picks that you could probably find, even though a good portion of sectors are probably going to sell off as a result of the news for today and the headlines. But yeah, that's pretty much it. I don't have much else to share. So I'm going to pass the mic back over to Melvin, and he's going to continue with the session for today. All right. So yeah, we have a few more examples that we definitely want to look at when it comes to top-down analysis. So yeah, we're going to definitely do that right now. And yeah, but before we do that, let's see how those other pairs are looking right now. So we looked at the Euro USD. Let's go there now. Euro USD. And let's go to the 1 hour. And we see that price is making its way to the upside. It's trying to get there. It's making its way. And if you want to, you could look for that reversal type play, 15-minute bottoming, whatever you want to look at. But go down to the 15-minute. We see that price looks like it wants to bottom, but we have this first area of supply, not the first one, but the second one is where we think price will go to. Sometimes it barely misses it, and sometimes it hits it and doesn't execute the order, and sometimes it gives us a nice clean follow through. So but yeah, we'll see. But we have our alert right here. Let's go back to the 1 hour. Let's go to the pound USD, see how that's looking. Okay, so yeah, right here we're at pound USD. Pound USD is almost at this zone or at this level that we're anticipating anyways. So yeah, let me do this right quick. Let me just add this alert right here. Add alert. Let me say price testing 1 hour supply. Yeah. Okay, so yeah, we have that. But we're expecting price to go a little bit deeper right into this area. So okay, and we did US dollar Swiss franc. So let's do that right quick. US dollar Swiss franc still pretty much fairly strong, but we do have price hitting this area of supply up here. And if you want to, since we got a long way to go, you could look for a sell opportunity on this one as well. um, and then just look at history, look at price history. The last time it was in this area was right here. So what happened when price was here? Did price create topping? Let's go down to the 15-minute. Let's see. Okay, and yes, we sort of do see it. Price created this double top continuation, broke to the upside. We had this pullback, and then price fell down, but we had another opportunity to get back in, and price continued that strong decline to the downside. So yeah, we do see it there. But if you want to, you can look to trade this lower if you want to, because we're expecting price to go down to this area. All right. So with that said, what I can do right now, we can go and look at some new opportunities and see what happens. We're going to do top-down analysis. So let me just simplify this. So then the first pair we're going to look at is Swiss franc, Japanese yen, CHF, JPY. Looking at the daily chart, and as you guys can see, even from here, let me delete this. Um, we see price, has been in this consolidation phase for, a few weeks now, and is retesting these highs again. But you can see that a range was defined by this level right here, where we have this wick candle right here, and this high right here. Let me just draw it in. This high right here. So this one candle right here defines sort of like the range, but really this is an anomaly. What I tend to do from time to time, I just sometimes ignore these candles like this because it's not reflective of the consistent price action. Like this was likely news driven, this candle. So we can sort of ignore that, and we can just pay more attention to price testing these areas right here, which right now we can see that price is testing daily supply or daily structural resistance, however you want to say it. But we see that price is testing this area of supply, and stochastics is overbought at the same time. You can look, see that stochastic is overbought. That should tell you something about this move. We may see a deeper correction all the way to where the buyers come in at, which is where? Right here. This is where we're expecting price to go, where we have some buyers positioned right here. So what we're going to do is look for an opportunity to sell somewhere around this particular zone. So yeah, this is going to be interesting because this is something that I see right here. This zone right here could also act as right there, could act as an area of support. Yep, it can act as an area of support. Let's go down to the 4-hour. All right, so right here we see the 4-hour chart, and we see that price is already tested this area, respected it, pushed up, and now it's testing this area again, or is getting close to it. We may see price make another attempt higher, another push higher, and then sell off from there. And then if it breaks the low, then we can just look for price to eventually get down here. But let me see how price is forming up here, because we do see some consolidation. Like price did slow down up at these highs, right around here. So then let me see what's taking place on a smaller time frame. Let's go down to the 1 hour. Okay, and on the 1 hour, this is what we see. We see this consolidation on the 1 hour. Price broke and closed below the low of this consolidation, and now we could possibly see price retest this area. So it's going to be very interesting. What makes this so difficult is the fact that you have all of this demand right here in this area, this huge wick right here, this huge wick. We can't ignore this huge wick. So maybe it may be best for us to sit this out because we have a huge wick right here. We have a nice wick right here. This is what price is responding to right now, this area of potential minor demand. So there's a possibility we could see price push up and retest the highs. That's what I'm saying. But what I'm going to do is still be on the lookout when it comes to this particular setup. I'm going to look for price to retrace. Of course, we have this place where the sellers came in. We can see something similar even in a little bit. But in this case, I wouldn't just get in. I will look for bearish confirmation on a smaller trigger time frame. So let me identify this zone right here. So then we have this zone right here. Let me change the color. And we also have this zone of indecision, right here. So price can either come up to this area, fall, or come up to the second one and fall. But in either case, what we want to do is look for bearish confirmation. We're not going to just get in just for the sake of getting in. We want to wait for bearish confirmation. But based on what I'm seeing now, there may be a likelihood that we may see price go to the second one. The reason why is because of what I said before. Remember this? I said not the first area of supply right here, which is the first area, but the second one, which is, right around here, this area right here. So, there's a possibility we could see price push up, come into this area, come down, form like an inverted head and shoulders, and then pop up to this area, giving us a 3-wave pullback. And then from here, we can look to sell. So, I'm going to see if that's going to take place. I would like to see that take place, as a matter of fact. So I'm going to pay attention to price pushing deeper or pushing higher into this zone. And let me try it down. So yeah, we'll see what happens. But yeah, this is what I'm expecting on the Swiss franc Japanese yen before we look for an opportunity to sell. So again, wait for the pullback, look for your opportunity to sell somewhere within this zone, and stop. Well, if you enter at this zone, it'll be around 149.59, but we'll be targeting this area of demand down here, which will give us a nice 3-to-1 reward to risk. However, like I said before, we may want to enter on bearish confirmation. So if price does reach this zone, look for that confirmation on the 15-minute chart before you decide to engage yourself in this particular setup. So yep, that's the Swiss franc Japanese yen. Are there any questions about this particular setup before we move forward? Okay, so now price is testing 1 hour supply on pound USD, and I think this is because the market opened. Okay, and we'll see. Came up there pretty strong. Let's go down to 15-minute. Okay, so then not the first one, but maybe the second one, maybe up here, the second one. But it looks like it's responding to this level right now. So hopefully okay, so yeah, hopefully we don't see things turn too quick. Let me see what the how far price has moved for today. Let me see the average daily range for this particular pair. So then this is with the ATR indicator in order to know what the average range is. Let me of course do that. Okay, and okay, right here we have 208 pips on average. So price travels an average of 208 pips per day according to this particular tool. But as you guys know, there's a resource called Mataf. We can go there now. Mataf, and we can see what they will give us, because that can help us to determine what we may need to do for pound USD on our end. So let's go to pound USD right here. And this is based on the last 10 weeks, but we may need to. Okay, so based on the last 2 weeks, pound USD travels 167 pips on average per day. 167 pips. Let's do 4 weeks. Okay, so now we're doing 4 weeks. Let's see how often it travels. Seems like it's been traveling a lot more lately, a lot stronger lately. So right here, 246 pips, 246 pips. So we got 246 pips on a Wednesday. We have 208 pips on what you call it, on Mataf, or on the ATR. Let's see how far prices move for today. So let me take this pip range tool, take it from this high all the way down to this low. So it's nowhere near our average daily range. So we could still have room to go lower. So let's go back to that 1 hour chart again, because we may want to get in soon on this particular sell opportunity. So with that said, what we would do, if you're risky, you can get in now, or you can wait for price to test this area at 1.1268, around there. It's up to you what you want to do. But if you want to get in now, we can. But we would have to go in at a small position size. Yeah, this is really moving kind of strong. But yeah, let's, for the sake of it, let's try to get in now. I'm just going to get in now. I don't even have this open. Okay, so it's hitting the area right now. It's hitting that area right now. Go pound USD. Let's look to sell. And we're going to do, let's do a 38 pips, like 38 pip stop loss, like what we have. 38 pip. And okay, yeah, okay, let's enter a sell right now. All right, okay, so yeah, we're good. So yeah, we're in this trade right now, and we'll see what happens. So hopefully this holds, but if not, then we'll be stopped out with a little bit. But this could reverse for all you know. I mean, we'll see what happens. Yeah, so all right, so we'll be looking to, we're in this sell right now. You can see that price did respect this zone right here, so hopefully that will hold. And what we can do is hold this out until it gets to at least 204 pips. As a matter of fact, let's see where 204 pips is. Let me go back to the daily. And let's see where 204 pips is. Is it right here? Well, this is 170 pips right here. So this is where we have our target. So yeah, we can just leave it right here at this target right around here. Is that 1180, 85? You can say 1185, 1.1185. Just keep it there, keep it simple, and yeah. Yep, that would be our target. So let's do that. All right. So yeah, we'll see what happens, and yeah, hopefully we'll see a continuation of this move to the downside. If not, then we'll be stopped out because I think well, I know we got in a little bit higher, but yeah, we'll let you know. I think our stop is around 1308 around here, I believe. 1308, which is up here. So yeah, or 1307, and right there. All right. So yeah, let's see how this goes, and yeah, I'll keep you guys posted. But yeah, this is the pound USD. You know, we could see a deeper push, which may actually happen because on the 15-minute chart, we see this could be leg A, leg B. Leg B could be a reversal into this particular zone right here. So we could see something like that where we have, you know, leg A, leg B, and another leg C expansion up here, and then, you know, you can see that correction lower. So that can happen as well. I just want to let you guys know. But yeah. So then yeah, we're in this particular trade, and yeah, we'll see what happens. We will see what happens. All right. So okay. All right. So we got that. How's the Euro USD looking now? Okay, Euro USD almost hit this level, almost alerted us right here. And I knew because remember, this was the institutional level right here. It went to 97.96. This institutional level. So then we may see price continue sliding lower even on the Euro USD as well. So then that's something that we just have to bear in mind, that we may have missed out on this setup. And but if price does come back up, then, you know, we'll definitely look for that sell, that push or that move lower. All right. So okay. All right. So yeah, where were we? I think we was looking at Swiss franc, Japanese yen. Let's see if there's another pair. Okay, I'm going to do one more setup, Kiwi CAD, and then we can call it a day. Let me just hurry up and get through this one. I'm not going to spend too much time on this, but let's do Kiwi NGB CAD, Kiwi CAD. All right. So okay. So right here we're on the daily chart of Kiwi CAD. What we can obviously see is that price is testing an area of supply or resistance, however you want to call it, and it's respecting this area. And if you look, well, yeah, this one right here could be a little bit tricky because we still have a bearish environment, which is good, which is what we want to look for. You have a bearish environment, but we see this complex pullback, and that's all this is really a complex pullback. So then let's see how things are looking on the 4-hour chart. I know this could be kind of interesting, but we do have this zone as well that we have to pay attention to because this is where buyers came in at. Price may push down, fall down into the zone and come back up. In other words, we may see price come down here, come back up and test this area and push up high again. That's something that could very well happen. So we have to pay attention to that zone or area. But let's go down to the 4-hour. Okay, so then this is the 4-hour chart of Kiwi CAD. What we see is price consolidating somewhat on this time frame. But what we can do is look historically and see where there are other examples where, you know, price topped on the 4-hour chart after hitting the zone, and we definitely see it here. We see price pushed up higher high, it broke this low down here on this move lower, corrected, ready to correct to supply, and then we saw price slide lower, and then from there price pushed up again, and you know, for this one we just seen this straight tank. But yeah, for the most part, we would typically want to look for 4-hour topping. So hopefully we'll get that. But if not, we have to be mindful of the fact that we do have this zone right here that has act like a zone of support or supply in the past. And price could very well fall in the zone and be tested by it. So that's something that we need to just know up front. But yeah, we're looking for likely 4-hour topping in this area, and you know, hopefully we'll see it soon. So we'll see. But yeah, that's pretty much it. I don't really have too much more for you guys right now. That's pretty much it. The only trade we're in right now is this pound USD trade, and hopefully we don't get stopped out. Hopefully it goes according to plan. I wish we would have traded that Euro USD. It seemed like the Euro USD is really responding to this level as well, but we can see this reaction. So that's good news for us. We're currently in profit for this particular trade. So let's see what happens. But all right, guys, thank you guys so much for coming to today's presentation, today's session. We really do appreciate you guys. And as we always say, remember to always count your blessings, not your pips. And we will definitely talk to you soon. Stay encouraged, stay blessed, and we hope you have a wonderful, wonderful rest of your day. Yeah, but you can see this was very accurate, guys. See how accurate this was with this orange zone? Not the first, remember the second. If you abide by that alone, then you'll be more accurate. But anyways, thank you guys so much for coming. I really want to start doing some sessions on the weekends as well, but I know this month has been a really, really busy month for us. Our weekends are very busy. So maybe November, we'll look to do something. In November, for some of you guys, I know some of you guys know this, but November's our birthday month. We actually have a birthday on the 14th of November. So we should meet, but we'll let you know if we're around during that time. But thanks again for coming. We really do appreciate you guys. And as we always say, remember to always count your blessings, not your pips, and have a wonderful rest of your day. God bless you all, and we'll talk soon. All right, okay, bye.